If you've been watching GameStop stock anytime recently, you will have noticed that it's been on an absolute tear with a classic short squeeze. In today's video, we're going to explain exactly what a short squeeze is, what you need to know about it, and what you can do to profit from it. But wait a minute, you mean that this failing retail store with horrible price gouging and bad customer service is actually winning right now? I mean, this is the store that we used to use as kids, right? Yeah, it's actually rallied 430% over just the past month. By the way, does anybody else remember when you used to go into GameStop and you had a used game and you bought the game new and perhaps you played it for a little bit and then you're like, I don't really like this game, or you already beat it and you wanted to sell it off, and you go into GameStop and you're like, hey, I've got this used game, it just came out last week, I'm already done with it, and they're like, we'll offer you $12.50. And then you look over at the shelf and it's like selling a used version of it for like $50. You know, you paid $60 brand new, it's a week old, now they're only gonna offer you $12.50 for the game, and then they're gonna sell it for $50. Does anybody else remember that? Is it just me? I mean, I had so many moments as a kid thinking, what the I just bought this game, I'm going to pay $60 for the game brand new, I played it for a week, I'm going to come back in, try to sell it for you, you're only going to give me $12.50, you're going to turn around, throw it back up on the shelf and sell it for $50? What gives? Anyway, yeah, that's right. This stock has been on an absolute tear, and it's all thanks to Wall Street bets and a classic short squeeze. Let's talk about what that actually is and what you need to know about it. In just the past month, the stock has rallied over 400%, and as of today, it did hit an intraday high, going up over 120% additionally just on the day, but it has since fallen back down to a somewhat reasonable amount compared to where it was earlier in the trading day. So how did this happen? Well, first you have to actually understand what short interest is. Short interest is the amount of people who have shorted the stock. Now let's talk about what shorting is. First, I want to say, when you think a stock is going to go up like most people do, this is kind of the basis of stock market investing. This typically means that you're going to go and buy shares of a company thinking that they're going to go up because of new products or new services that they have, and they're going to be a more profitable company at some point in the future. So you're betting that they're going to go up. Well, if you are shorting a stock, you're actually thinking that the share price is going to go down based on a number of factors that are going to hurt the company. And in the case of GameStop, this is actually the case because GameStop's not getting as much foot traffic as it used to. People are buying games on their PlayStation or Xbox directly instead of going into the store. Basically scenarios like that. So basically what somebody does when they short a stock is they'll go out and they borrow the stock from somebody else. They sell it on the open market for the current price. Let's say that current price is $10, and they hope that at some point in the future they can buy back that stock for $5 before returning it back to the original owner. So they're going to borrow it, they're going to sell it first, hoping that in the future they can buy it back at a lower price and then return it to the original owner of that stock. So in this scenario, when the share price does go down, then the people who have shorted the company actually make a profit. But let's say that the share price is down already and it starts to climb, right? People are buying into it, people are buying the stock, and it's pushing the price up. As that price continues to climb, the people who have shorted the stock must cover their position, basically the same as cutting their losses in order to avoid having massive losses on that position. So they must buy back that stock as the price continues to increase because they are going to lose money as that share price actually goes up. This is basically the same process, which is much more common going into a stock and saying, okay, I'm going to buy this stock for $10. If it drops 10%, I'm just going to cut my losses and get out, right? That's what you would do in a normal situation. This is the same exact process as what short sellers are doing, except for as the share price goes up, they must cut their losses by buying back the stock and returning it to the original owner. So as the share price continues to go up, short sellers buy back into the stock, people see the stock going up, and it just continues to push the share price higher and higher. Theoretically, the share price could climb indefinitely, right? There's no limit on the upper bounds of what that share price can climb to. However, when you buy the stock in a normal scenario, the lowest the stock can go is zero, right? You can lose your entire position based on that. However, as a short seller, your losses can be infinite because that share price has no upper limit theoretically. As that share price goes up, other people who have shorted the stock must also cover their positions, and so you can see how this is basically squeezing the market and pushing the share price up even further. Once retail traders and investors see that the share price is going up, they say, hey, GameStop must be onto something. What's going on here? I need to buy into this before it climbs even higher because I can turn a quick profit off of this, and therefore the process continues. You got to beware though. Oftentimes the short squeeze can push the share price up so quickly, a lot of people get FOMO and think that it's going to continue going up, and so they buy in at these astronomically high prices before the share price comes crashing back down. To show you an exact example of this, let's actually jump over to my computer here and take a look at Webull and see what the stock price did today. All right, so now that we're here on the Webull platform, which by the way, get your free stocks using the link in the description below if you haven't already done so, you can see that looking at the GameStop share price, you can see that it's been on this massive run since January 12th. January 12th, it was trading at roughly $20, jumped all the way up here to $40, almost doubled there, and then it kind of traded flat for a couple days. This was the first short squeeze that we saw, and it just went through another short squeeze over the last 2 trading days. So if you look at the daily chart here, you think, okay, cool. It's gone from $20 up to roughly 78 where it's trading at right now. But if we actually zoom in, let's go to the 1 hour chart here and zoom in here, you can see that just based on today, you can see that the market closed at roughly $64 on the last short squeeze that we saw last Friday. Today, it jumped up massively, hitting an intraday high of $120. I was looking at it on Robinhood on my phone earlier this morning as this craziness was going on, and I saw it hit $154 for a brief moment. So you can actually see that on this 1 hour chart, hit a intraday of 120. Let's see if we zoom in here a little bit closer, if it actually tells us a higher number here. Yeah, so if we come into here to the 5 minute chart, it says 144. If we come into the 1 minute chart, let's see what this says. Let's zoom out a little bit. Yeah, 158 on the 1 minute chart. So this is ridiculous. If we just zoom out here, you can see the massive amounts of buying and selling going on during this time. So right here, this is $64. There's a massive short squeeze overnight as we went into the trading day today, opened at roughly $100 and traded sideways before climbing again massively, hitting an intraday high of 158.91. And then the people who bought in during this insane run, hopefully they got out. You know, I don't know if they did. There's going to be people who bought in this range that unfortunately were not able to get out in time, and the share price has tumbled back down. At this point, it was at 160, let's call it. It almost halved. Actually, it did halve all the way back down to $79. So this is exactly what can happen in a short squeeze. Don't get caught into this hype. Don't get caught in on the hype of, thinking the share price is just going to continue climbing as this happens, because it does very oftentimes come crashing back down and very quickly. So guys, that's what happened here today on the GameStop stock short squeeze. I hope this was helpful for you. I cannot wait to see all of the memes that come out of this and the massive gains and the massive losses that come off of the Wall Street's Bet channel. I can't wait to see those videos here on YouTube saying, hey, this guy turned $100 into $100,000 and this guy bet $100,000 and lost it all on this stock. I feel bad for those guys, but that's what Wall Street Bets is all about. Be careful out there, invest wisely, and good luck. Catch you in the next one.